Hi, this is Nilus Mattive for Money Markets TV. Last week, one of our country's most storied corporations officially turned 100, and it just so happens to also be the firm that started my love affair with the stock market and dividend payments. That company is International Business Machines, or IBM as it's more commonly known. IBM started as the computing, tabulating, recording company, and as the name suggests, its earliest products were calculators, cash registers, and other similar devices. However, IBM eventually made its transition into the products that we now most associate it with. It began with the Mark I computer in 1944, developed with the help from Harvard University researchers. Within 10 years, IBM was selling computers based on vacuum tubes to private customers, along with its extremely popular typewriters. The company's very first desktop computers weren't far behind, launching sometime in the middle of the 1960s. Today, IBM holds more than 20,000 patents covering everything from the magnetic strips on our credit cards, to UPC barcodes, to ATM technology, and a whole host of other technological innovations. My own personal history with IBM started during the late 1980s. I had seen the movie Wall Street, and although I was only in grade school, I was fascinated with investing. My parents had always fostered a sense of financial independence in me, so I decided to invest some real money in the market. I had heard all about blue chips and how they were the very best companies in America, and I also believed in technology, so I opted to put all of my money, saved from recent special occasions and holidays, into 5 shares of IBM. To this day, I can still remember the exact purchase price, $155 a share. Unfortunately for me, the PC clone war was right around the corner, and as investors became more and more concerned about how this competition would affect IBM's profits, I watched in horror as my shares plummeted. It was a valuable first lesson in the concept of risk, because it taught me that even the very biggest and the very best stocks can lose you a lot of money. I've learned an even harder lesson in the years since then, because long after I had sold my shares for a loss, they rebounded and went on to double my initial purchase price many times over. But my ownership of IBM also taught me the value of regular dividend payments. What an exciting thing to watch little payments coming in. And what a real reminder that even as an elementary school student, I was an actual owner of one of the world's largest and most important businesses. Fast forward to today, and IBM can still teach us all a few more important lessons about investing. For starters, let's talk about those dividend payments. The company has been making them consistently since 1913. I have a feeling that fact alone would surprise a lot of people, not just because IBM is a tech company, but also because it has had astounding growth during the last century. You see, it's a common misconception that dividends signal a company's most innovative days are behind it, that they indicate management doesn't have any better use for its cash, that only boring, slow-growth dinosaurs pay dividends at all. But nothing could be further from the truth. In fact, more and more technology companies are choosing to pay dividends, including Cisco, Intel, and Microsoft. And that does not mean that those firms will stop finding new ways to reinvent their businesses going forward. Just consider Microsoft's pending purchase of Skype. But getting back to IBM, while I don't think it's a screaming bargain right now, its centennial should remind us of a few important things. First, America has a long history of ingenuity, and I believe our brightest minds will continue to make important new discoveries going forward. Second, while there are always speed bumps along the way, our country's best companies are truly built to last, both as businesses and as investments. And third, dividend payments are not a barrier to a company's future growth. In fact, they may simply be a reliable indicator of both longevity and long-term investment potential. I'm Nilus Mattive for Money Markets TV. Thanks for watching.